Welcome back to part 2 of Raising the Flipping Bar. I'm your host, Derek Marlin, and we really did a deep dive into the NAR lawsuit settlement and what's going on in today's environment. So if you missed that episode, go back and tune in. But what I want to do is we're back here with Rick and with Adam, two of our rock star team members at Elevation, and we're going to dive into the Denver real estate market. We're going to dive into some national trends and really kind of help you for your road path to success towards the end of this year and more importantly into 2025. So let's jump back into today's episode. Welcome to Raising the Flipping Bar, the go-to podcast for aspiring and seasoned real estate investors. I'm your host, Derek Marlin, and I'm the CEO of Elevation. We're a real estate investment company based right here in Denver, Colorado. We'll dive into smart investment strategies, market insights, and essential tips for scaling your real estate ventures. Whether you're making your first investment or your 100th investment, this podcast is your blueprint for success in the ever-evolving world of real estate investing. Get ready to elevate your real estate game and begin your journey with me. So guys, it's crystal ball time, and we're going to talk about kind of where we feel like we see where the market's going. And of course, if all of us knew exactly where it is, we wouldn't be recording this podcast. We wouldn't be telling anybody, and we would be all a lot wealthier than we probably are right now. But in general, we can all look at data. We can look at our gut intuition. I think, again, this is why I love having you on, Rick, is you see so many transactions, thousands of transactions over the course of your career and real-time data. So maybe let's start with you. Where do you see the market leaning in the last 4 months of the year? And in general, where do we feel like it's kind of going for 2025 in Metro Denver? Everything's super, super localized, but in general, I'd love to get your crystal ball on kind of where we're going the next 15, 16 months.
I'm excited.
Okay.
Honestly, I've already seen an uptick in activity, which is counterintuitive based on the time of year we're at.
True.
This is usually the time when the market dies off, but it's actually picking up. And I think that's largely driven by, one thing that we didn't address is that this is a big deal. This NAR settlement is a big deal in our industry. 80% of the buyers and sellers out there have no idea this is even happening.
That is such a good point. I want people to go back and rewind that you're right. We get so myopically focused on like, oh, this is what's happening to me and this is my business or whatever. 80% of people don't know.
Or they heard a news story in the background while they were doing most consumers in our field are going to be expecting things just to be the same that they've always been. Mm-hmm. Our conversations will be a little bit different, but ultimately how it plays out probably will be. What's driving the excitement and the activity right now is the Federal Reserve.
Yeah.
The Fed is already recognizing that if we're not in a recession, we're very close to one based on the fact that the jobs report was way over-reported. They reported, what was it, like 1 million jobs that didn't actually exist?
Yeah.
And so you combine that with increasing debt that people are taking on and things like that. So the Federal Reserve is starting to say, okay, we've gotten to a point where inflation is back more in line with what we want it to be going forward. And so now we need to start bringing the rates back down to try and salvage the economy. Yeah. And mortgage companies, they're not directly tied. So when the Fed drops the rate 1%, it's not like mortgages the next day also drop 1%.
Yeah.
Mortgage companies and lenders they try to be proactive and they try to do smaller changes. So based on this communication, the loan interest rates have already started to come down. And, I heard somebody say that there was a loan that they worked on. It was a 2-1 buy down, and it may have also had like an ARM associated to it. But anyways, it was like 3%.
Yes. That
this loan closed with. So the rates are already starting to shift in that direction. And those buyers who were like, man, I don't want to pay 7.5%, 8%. Well, now all of a sudden, if it ticks down just a little bit below 7, psychologically, that's a big deal.
Yeah.
And so I think we're starting to see more buyers enter the market based off of the news and the activity with interest rates.
Well, it's funny you say that you had a networking event last night, the collective, and we talked to one of our other collective members, and he quoted in the mortgage business a 5.99% investor property rate. And he actually put the client on hold. Yeah, on a jumbo. That's right. Yeah. And it was a bigger property. And so he put the client on hold and he was talking to his underwriter, like, did we screw this up? Did we give her an owner occupied rate? And she's like, no. It's good. It's good. So you're right. I mean, it's already slowly starting to bake in. So that's cool to hear that correlation of market activity, and of course rates are a huge driver.
Yeah, so I think that speaks well for at least the next few months in our business. Sure. We've had more and more inventory coming to market and buyers sitting on the sidelines.
Yeah.
Buyers are starting to get active again. That's going to balance things out. And I think we're going to see some more activity through the Q4 of 24. Of course, the big trump card could be the election, right?
Yes.
I mean,
pun intended.
Right.
Pun intended.
Exactly.
Yeah.
So we don't know what traditionally election years will see a dip in productivity because it doesn't matter which side of the aisle you're on. You're waiting to see, did we win or did they win? And depending on, like, if you're on one side and your team wins, hey, let's go buy a house now. I feel good. Or vice versa. It's really weird, but they'll typically sit on the sidelines. I don't know if we'll see that again this year because the rates are the mitigating factor, but it's definitely something to consider.
Yeah, that's well said. So, Adam, where are you feeling like we're kind of leaning towards the rest of 2024 and leaning into 2025, at least in Metro Denver?
I agree with Rick. I thought this year was going to pick up a little bit more than it had. Yeah. We realized that around springtime.
Yeah, we sure did.
We really realized that. Yeah. But now we're at the point where buyer activity is picking up and the active listings are actually going down. Yeah. It just started. So I think through the end of the year, you're going to get people that need to sell that are on market. But statistically, if you can, most people often wait until spring the following year to sell. But I think buyer activity is going to actually be pretty strong compared to years past. And then at the end of the day, the real estate market has been slow the last couple of years, not because of the real estate market. It's been external factors that have been creeping on it. We were at a 5 million home deficit a couple of years ago. There's reports we're 8 to 10 million right now. Yeah. The second things correct, buyers that look at rates and they're now at 5.5 or whatever the case may be. Well, that seems high to people that refied at 3%. But the last couple of years, when you're talking 7%, well, that seems pretty good. So I think we're going to have a window of time frame from now to the end of the year for buyers to get in at the bottoming out phase.
I totally agree.
You're going to get sellers that agree to the 2-1 buy down. You're going to get more back on inspection. And then if you have the 2-1 buy down, you're most likely going to have refinance opportunities in the upcoming couple of years before your full rate kicks in. So I think we're going to have a really good window for buyers to get in. And then I think spring is going to get back to more normal, not COVID, but 2018, where a good property gets 5 offers relatively quickly. Yep. We just have a housing shortage at the end of the day, and it needs to be solved.
You guys bring up a good point, and it kind of triggered for me thinking about, let's kind of go maybe back a little bit high level from an inflation standpoint. Your point earlier, Rick, about rates, I think are very important from an inflation standpoint. If I told you that you were going to, in 2002, pay the same that you did for buying a car or for buying a gallon of milk or whatever else, if I asked you that question, would you think that that was a little odd that you're paying the same thing, whatever, 23 years later? Or would you be like, oh yeah, that makes perfect sense. You're going to pay the same thing. There's no inflation.
I totally think there'd be inflation.
It'd be a little more expensive. Right, of course. So I bought first house in 2002, and our rate was 5 3/4. And then we bought it down to 5, and we were ecstatic. We were so pumped. And that's 2002. We're probably going to be at that same thing here within the next 6 months. And that's whatever, 22 years later, 23 years later. Like, to me, that is kind of like, to your point, Rick, of like, where's the norm? Your point earlier, Adam, was great too. COVID was such a crazy outlier, both with all these external factors, with 0% interest rates and very low mortgage rates. Like, we're just trending back down to the national average, and people are losing their minds over it. Yeah. I mean, you're going to buy the same thing of what I got my rate in 2002.
Yeah. It changes is the value of the property.
Very true.
But that's why people invest in real estate, right? I mean, it is a hedge against inflation. What do the wealthy people do in times of heavy inflation? They buy assets. Because those assets go up in value with everything else. And that's the exact same thing with real estate. That's why it's usually people's biggest and best investment in their life. That's why most people use that as part of their retirement plan, because you know that your real estate is going to be tied essentially to that inflationary rate.
Yeah.
And so we can get into the other quadrants of income with real estate, but that's one of the big ones. I want to circle back real quick. Mm-hmm. One of the things we were just talking about with respect to Q4 and how things are going to be different, one of the things I'm already seeing, which is really interesting and unexpected to me, and I've thought about it, I know why, is that some of my agent partners, another reason for the increased productivity is that their lead sources are more productive.
Yeah,
and so that's bringing, I think there's 2 factors to that, right? The lead sources are more productive because buyers are starting to get interested again. They're seeing those rates come down. But I think also the agents that utilize those lead sources, a lot of them have washed out. Mm-hmm. And so there are more leads to go around to fewer agents. And so I think that productivity is also a benefit that we'll realize in the next quarter.
Yeah. But if people have gotten maybe a little nervous, they've put their head down, they've stayed focused, they've stayed in their lane of what they're going to try to do to build their business. Shocker, newsflash, they're getting more business. And when you have less competition from some of the agents that probably shouldn't have been in this business anyways, and investors that should have been in this business, you're right. It's like, how can we have our war chest? How can we make it through the tough times to come out and just crush it from a market share perspective, crush it from people's productivity? I think you're right. It's cool to see all these data points, and I hope everybody listens and gets this. It's like, you can make it to the other side. There's some fruit for us to harvest. So no, I love that point. Yeah, that's a really good point. So we're going to take a quick break and tell you about the next Elevation Academy. If you're looking to dive deep into real estate investing, this is definitely the event for you. Our academy features over a 100-step process to help you navigate every single thing from market analysis all the way down to every aspect of project management. So this is tailored for both beginners and seasoned investors. And our one-day intensive training will equip you with the strategies and insights needed to elevate your real estate investing game. Spots are definitely limited, so click on the link below in the show notes to sign up and transform your approach to real estate investment. Okay, let's get back to the episode. I would love to hear from either one of you guys. What's the data that you guys are looking at? And that's something that I gravitate towards and love having you guys on our team. So we've got real time, in the trenches data. But is there stuff that either one of you guys are looking at and either one answer?
That's not me. I don't look at the data. Okay. I'm just more of like seeing what's going on in my sphere. So okay. I know Adam looks at the data. What do you think?
There's a couple things, right? And it's basically geared all around the overall picture of supply and demand. That's all real estate market is. That's all any market really is. So days on market is huge, right? We're following that. Also the absorption rate. So, right, they say a 6-month supply is what's called a standard market. I personally, or a balanced market. Balanced market, yeah. I think that's a little bit outdated. Kind of agree. I think that's, 1985. We had to wait for the book to get printed out and then you go meet at the actual real estate office and go through the listings, right? Right. Now we're seeing it instantly. So we're at about around 3 months supply and it's starting to trend down again. Mm-hmm. More properties are going under contract and less people are listing. Right. So I think we're starting to trend in that right direction. So watching that absorption rate, the days on market, the list to sales price, all of those things are kind of how we judge the market.
Yeah. And I think people trying to track it as often as possible. Definitely want to give a shout out to Megan Aller at First American Title. She puts out great data and she does it on a weekly basis. So yes, it is nice to have stuff on a monthly basis, but where, to your point earlier, that rolls, you're kind of almost getting like 5 to 6 week old data. So if you can kind of shorten that learning curve, that's something that I'm always trying to put into what we're sending out to our team, which is, you're right, what's going on a weekly basis. I know, Adam, you've done a great job and kind of nerded out and showed me how we can pull that data ourselves in the MLS anyway. So you just put in the extra time. But I think that's super important. Maybe let's kind of shift gears a little bit and tell me a little bit about how each one of you guys feel. And this would be great because, Rick, you're seeing it not only as being a part of our team at Elevation, but then also some of your other clientele. And Adam, obviously managing our team here and dealing with other agents on the buy side. What can agents do or what can investors do to be successful? And the way we're positioning here at our company is we now have a 16-month year. Not that we're writing off 2024, but all the actions that we do today are going to help us not only still close deals this year, but more importantly, build transaction volume for next year. So give those folks listening like your guys' keys to success and what's going to keep people productive.
Yeah, I think for agents, it's having a listing focused business. Securing listings is going to provide you that leverage. And this isn't new. Listings have been king since the start of real estate. He or she who has listings has the leverage in the market. So I think it's going to further provide opportunities. I think we're going to see an uptick in people calling real estate signs, trying to be unrepresented, or if they think they're savvy, to where agents might be able to double dip to some extent or get those calls and then pick up some buyers from it. So I think for agents, that's going to be a key factor. And then I think for investors, offering 0%, right? If your goal is to buy a property that's going to cash flow properly, or you can fix and flip it, or whatever your exit strategy is, if you're going to be buying in the next few months, limiting the amount that you get just from the sale might make your offer stand out.
Yeah, well said. What about you, Rick? What's for success for folks out there, investor, agent, whoever?
Well, from just the consumer's standpoint, I think Adam really hit on it. It's a matter of utilizing the commissions structure as leverage that in a way that maybe they haven't done before. It's also paying attention and not being afraid to become active. Another thing we touched on earlier that Adam mentioned was, when they're utilizing these 2-1 buy downs, it's going to give them an opportunity to refinance in a few years.
Yeah.
If the tea leaves, are correct and rates are going to start trending down, rates went up at an unforeseen clip when they started trying to address the inflationary problem. They were jumping up a quarter of a point at a time.
Yeah.
We're not going to see probably a reduction or adjustments back downward towards the mean at that same rate. They're going to be smaller moves. And so waiting for some big benchmark might wind up costing consumers the opportunity to get the best pricing that they can during this time of year. So I think that that's going to be pretty important. And then from the standpoint of brokers and agents, I think now is a really good time and I think it's really important, not to approach any opportunities that we have with consumers as an opportunity to try and get a listing, get a client, earn a commission. I think if we change our approach and start looking at it as an opportunity to help people solve their problems, because we've got so many tools that we can utilize, especially with our team, because we have the ability to help find investors and get cash buyers and get people out of a property within a couple of weeks. And we have the opportunity to help people improve their property to realize maximum profits. And we have the ability to help people sell homes the traditional way. And so I think, generally speaking, the realtors and brokers are going to be best served by approaching every situation from the standpoint of just listening. I want to understand what it is that you're trying to accomplish. What are your goals? And then once we understand the goals, we can talk to them knowledgeably about some of the options that they can choose that best help them to accomplish those goals. And that naturally should result in some good client relationships.
Yeah. We've had such a great conversation. It's been super enlightening. I'll give you guys a second each to think about maybe one parting thought. I know we've kind of bounced around, which has been really fun, but if there's something that we feel like we need to share with the audience, I'll give you guys each a second here. But definitely as we wrap up in today's episode, definitely, again, we always say, not only follow us, but engage with us. This is a dialogue where we would love feedback. And there's a lot of other really smart people out there. So definitely you guys out there listening, watching, hit any channel that you want and engage with us. I'll put it back. Maybe let's go Adam first. Any other parting thoughts, anything else we didn't talk on that you definitely want to touch base on before you leave?
No, I think I'll piggyback off the last thing Rick said there. I think if agents focus on doing that, right, sales gets a bad connotation. If you really, all sales is I take a needs analysis to figure out where you're at and where you want to be and present solutions to your problem and help guide you in that direction. So if you come at it from that perspective and you focus on having a listings-based business, you're going to be just fine.
Yeah, love it.
Very cool. I got a parting thought and a parting shot.
Okay, good. I like that.
My parting thought is nobody's talking about appraisers.
Okay, yeah.
When these properties are being sold under this new commission, no offer of compensation in the MLS, how do appraisers know which property sold for this much money but had to account for this commission, and then which one sold for this much money but there was no commission?
Yeah. Well said.
There's no way for them to really easily come up with their calculations. I actually emailed with RE Colorado back and forth. I had to ask the same question 5 times.
Oh, man.
How do we show the appraisers? And they kept saying, you can't reference compensation. I understand that. I'm not offering compensation. And they kept saying, you can't offer, I'm not trying to offer. How do we show it retroactively in a sold listing?
Because that affects value.
It affects value. And ultimately, the final answer that I got was, there is a way in the listings to show, when you convert them to sold, what sort of concessions were made by sellers on behalf of buyers. And it lists them as closing costs and points. It can be argued that a seller who pays the buyer's agent commission on behalf of the buyer is making a concession. It's not the traditional concession that lenders look at, but I think that might be the only way to do it, is instead of putting $5,000 in the concession line, you put $25,000 and let the appraiser figure it out. But that's something that nobody's talking about, and that's going to be a problem.
Yeah, well said.
And my parting shot?
Okay.
Kansas City.
I love it. Thank you so much for being on this episode of Raising the Flipping Bar, and we will catch you guys on the flip side.